high quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been.
What is up, everybody? Good morning and welcome to Coffee and Crypto Live, the greatest show for crypto on all of YouTube. I am TA Tim, and I thank you guys so much for joining us. Go ahead, even before we get into the content, just go ahead and hit that like button. We got 120 people watching. That number's going to grow. Let's smash that like. If you are new here, consider hitting that subscribe button and join us every single day as we bring you everything you need to know about crypto. I'm super excited about today's show, even though we're going to be talking about recession. That's not a topic maybe everybody wants to talk about, but we're going to talk not only the charts of Bitcoin, we're going to, in that discussion section towards the second half of the show, discuss what coming in recession would mean and what you need to do to go ahead and prepare yourself for a successful, it's weird to say, successful recession and come out of it on the better side. I'm also excited because we got two special guests that are going to be joining us today. I'm going to let you see them when they come. They're going to be on set. You don't want to miss it. But I'm joined by two regulars. I got my technical director, Smay the Turtle King, that is going to try to hold it together after last night's Celtics loss.
I am going to try to hold it together, guys. But I'm still confident. I think Celtics in 9. They still have an opportunity here to bounce back. It's a good thing that Adam Silver decided to extend the series. I'm really excited about that. So,
yep. We're also joined by T Shroom. T Shroom, how you feeling this morning?
To be honest with you, better than I deserve.
Wow, there you go.
Yeah.
Classic.
Yeah, might surprise you.
Classic. Well, we got a lot of stuff coming up. Again, we're going to talk Bitcoin charts. We're going to talk recession and what you need to do to prepare yourself. We also have some other little stories here we're going to do in Market Pulse in just a second. But before we jump there, I want to make sure you guys understand, and we're going to talk a little bit more about this later, but one of the affiliates of the channels, one of the companies that helps us continue to come on day in and day out, is a phenomenal company for the reasons like what we're about to go into right now, and that's iTrust Capital. And some of you guys are going to say, all right, Tim, I've heard about iTrust Capital before. That's that whole company that helps you invest in a Roth IRA for crypto, but right now I'm trying to penny pinch. I'm trying to, limit what I'm spending money on. But guess what? This is the perfect time to be investing in Roth IRAs. Protect your future. If you were to go seek financial advice, if you were to go find a financial advisor, they would point you towards this is the perfect time in a recession at the bottom of markets to go ahead and start slowly investing money into your future for retirement that is tax-free, and everyone loves when something is tax-free. Guess what? iTrust Capital is the perfect company for you. If you sign up with our link down in the description below, you'll get $100 off as well. So there's actually even money in there, absolutely just for signing up. Go do that today and you will not regret it. But the other thing that keeps our channel going is all of you, and especially our members. And if you guys are watching on a computer, you're gonna see those names. They're green names. And so we're gonna read off some of those. But unfortunately, with Smay really going through the ringer here, and he's not really in the best state of mind to be reading those names. We brought in special guest Jordan Peterson, actually, to come read these green names. So, Jordan, how are you feeling this morning?
I'm doing well, Tim. Thank you.
Well,
yeah.
Well,
glad to have you here.
Hey, Jordan, I'm a big fan.
I would like to first, I would like to thank the Crypto Jebb team for bringing me on. I find them to be very people in very high agreeableness, and yeah, so I just really like them. But without further ado, I'd like to read some names. We have Elliot Locke, Ricardo Venegas, Colin McDonald, Dennis Pizarka, Grand Roofing Incorporated, Matt C. I really like Matt C. And then we have Elion and PhillyFan61, and Groovy and Crypto JMP and Weigel Out and Crypto Set Guy, and all I eat now is beef, water, and salt. And these people really get me going. They let me continue to do it. So without further ado, back to you, Tim.
Well, thank you so much there, Jordan. And we're going to go ahead and jump into our market pulse this morning. But before we look at the charts and we look at some of the stuff on CoinMarketCap, I want to throw it to T-Shroom because there's a couple developing stories that have happened within the last couple of days/hours. We've been following what's happening with Celsius. The newer one that's come out is what's happening with that hedge fund. Why am I blanking on the name of it? It's Three Arrows Capital. There we go, Three Arrows Capital. But also Elon Musk is back in the news for two different reasons. One of them being Twitter employees, and the other, his relationship with Dogecoin. And then the last one is an update with Charles Hoskinson. So let's go ahead, T-Shroom, break down each one of those stories. What is happening there, and what do the people need to know about them?
Yeah, absolutely. So I'm going to go through these pretty quick. Jordan, if you want to go ahead and jump to my screen. Jordan's also producing the show today.
I would love to, T-Shroom.
Okay, great.
There you go.
So now we're there. If you are feeling okay, Celsius investors unlikely to fund bailout, says a report. So the Wall Street Journal actually has chimed in. So embattled crypto lending platform Celsius Network is not on the brink of a bailout, according to the Wall Street Journal report, citing people familiar with the matter. And there's a long Canadian company here it's pretty French. I'm not going to try to read it, but major Canadian pension fund and New York-based Westcap Group led Celsius oversubscribed $750 million Series B funding round last year, which raised the firm's valuation to $3.5 billion. However, neither of them is reportedly willing to provide additional funds to Celsius, which earlier this week halted withdrawals from its platform. Right, so you can come back up to me just to wrap out this story. It's not. This is the next step for Celsius. Right, they've hired attorneys. These attorneys have put together a plan. That plan looks like they were going to go back to these investors and ask for more money. Those investors, as reported by the Wall Street Journal, are not looking to invest more money. So that's a negative outcome, a step in the wrong direction for Celsius. And it hasn't changed its tone on putting its community first and returning those funds to the community. At this point, I can still only assume that it will do its best to return those funds. But, it's in a tougher position than it was before now. And it's looking like Celsius is probably going to get those lawyers to go ahead and file for some restructuring, aka bankruptcy. Well, if you want to go back to my screen, we've got another story that's involving a very similar kind of grain here, which is Definance, Avalanche, Didex distance themselves from Three Arrows Capital drama. So we talked about this yesterday, that companies are going, that with Nexo, companies are going to start distancing themselves. The firm said operations will continue as usual as the crypto community assesses the fallout from speculation. The crypto hedge fund failed to meet margin calls. So there was a couple of important bullet points. The first is the three moved to distance themselves from 3AC, Three Arrows Capital, which may be facing possible insolvency after incurring at least $400 million in liquidations earlier this week amid tumbling market and troubles at crypto lender Celsius. DYDX is not exposed to 3AC contagion in any way, developers said in a tweet in early Asian hours of trading. And the article goes on to just kind of show folks like Avalanche and other companies that are distancing themselves from 3A Capital and saying, hey, we are not affiliated with them. We have not put any credit towards them. We are not in debt to them, and they are not in debt to us, and we are moving forward. So companies distancing themselves from you is never a good look, but that is what's happening over at 3A Capital. One that has a little less to do immediately with the retail market, but it will send reverberations through the crypto community as the details develop there. Then we'll jump over to the Elon Musk story. So here's what Elon Musk just told Twitter employees. And I'm not going to read too much of this one, but what's important here is that the deal is going forward. We have received word from the Twitter board that they are still looking to sell to Elon. And the fact that he's actually gone to San Francisco to the Twitter headquarters is a pretty big deal. Elon owning Twitter has been one of the bigger stories of the last couple months, and it's been subsided because of delays. But now it seems that we've taken a step in the right direction for Elon, at least. If you want Elon to own Twitter. And so some of the highlights of the things that were talked about at that meeting has ended and employees are worried about layoffs. So Elon has obviously tipped them off to layoffs. Musk wants Twitter to reach 1 billion daily active users. So setting higher goals, Musk diverts into discussions of aliens. So, and in classic Musk style, took the conversation to some fun place, a moment of reprieve and indulgence in personal interest. Musk says he doesn't care about being CEO. So this is an important point because, someone will be tapped as CEO. It could be the existing CEO, probably not. He probably will have somebody in mind, but it's not going to be him. Users should be allowed to say what they want on Twitter, Musk says, okay? Again, highlighting his dedication to freedom of speech, which has been the hallmark of this acquisition. Musk addresses questions of possible layoffs at Twitter. The company needs to get healthy. So, that's the answer in the negative towards folks who are working over at Twitter. There are going to be heads that have to roll in order to cut costs and maintain liquidity in the business. Musk has a strong bias towards in-person work. So he's also done this with Tesla, I believe, too. So he's calling folks away from remote work back to their desks at HQ to make work happen there. And there's a lot more that is talked about here, but you get the idea. Things are moving forward over at the deal with Twitter and Elon. Moving on, the billionaire Elon has also faced some headwinds as well as tailwinds over at Twitter, with crypto investors suing Elon for $258 billion over Dogecoin pyramid scheme. So that's, I believe, more than he owns. But a crypto investor has sued Elon for $258 billion, saying that the Tesla co-founder ran a pyramid scheme via Dogecoin. And that is a very interesting accusation. I mean, the fact that the press and the media are picking this up means that there must be some legitimacy to the case, but there's people that are trying to sue billionaires all the time. The lawsuit added that defendants falsely and deceptively claim that Dogecoin is a legitimate investment when it has no value at all. According to the lawsuit, since defendant Musk and his corporations SpaceX and Tesla Incorporated began purchasing, developing, investing, promoting, supporting, and operating Dogecoin in 2019, plaintiff and the class have lost approximately $86 billion in what is called a crypto pyramid scheme. So this is potentially a curveball for Elon Musk, but we'll have to really see how the dust settles on this one and see how more details emerge and what Elon's first volley. I don't think that he's really responded to this quite yet. But it'll be really interesting to see what his first volley is. Tim, I want to get your take on this story.
To be fair, I don't even think he needs to respond. I think this is absolutely ludicrous. It seems like these days people want to sue a lot of people for a lot of different reasons. But I think there's so much evidence even mounted. First of all, what evidence would there be that he was colluding? Is there any evidence that he got paid whatsoever, which he did not? In fact, I've actually seen the evidence that the creator of Dogecoin and Elon don't necessarily even like each other that much. And Elon has gone on record. There is video of him saying that Doge is a joke, but wouldn't it be funny if the joke ended up making it out overall? So at the end of the day, this will become almost a free speech attack on, hey, can you be so large on social media that when you say things, you can now be sued because you wanted to say whatever you wanted to say? For this to actually hold up, I think they're going to have to prove that Dogecoin gave him money to produce it. And like I said, that would be hard evidence to find, even if it was true, let alone the evidence mounting against that point is pretty strong. So I do think, when you said, T-shirt, when you said that the media is covering this, is this just them not really sure what to talk about and they want to find something new and spicy and they can get some headlines sold? They know that people are going to talk about this. They know it's a big deal. Anytime you can fit the word Elon into your article, you're going to get people reading it. And so I'm going to go on record right now as saying my belief is this is going to be a total fluff piece just to get some eyeballs on an article. But we'll see. We will stay up to date on what's happening there. But the fact that Elon hasn't even responded is a good sign. I don't think it's going to amount to very much.
Yep. And one more optimistic note here in our market pulse as we wrap it out. If you go to my screen, once again, Jordan, we've got the man himself, Charles Hoskinson, who is the founder and CEO of IOHC, or more importantly, you may know him as the leader of Cardano. He said something very interesting. I just received a formal invitation to speak before the U.S. House of Representatives Committee on Agriculture about Bitcoin and cryptocurrencies. It will be live at this date, June 23rd at 10:30 a.m. Eastern Time, if anyone wants to tune in. I'm going to go ahead and live on stream like that tweet. So that's the first time I think I've ever done that live on stream.
Oh.
Yeah, it's very, very cool. And if you guys don't know why this is important, why would you be talking to the Agricultural Committee? Well, that's because it's the committee that regulates the CFTC, which now has been favorably in our favor, in crypto community favor. It has been tapped to be the one to regulate crypto, not the SEC, at least for now. So it's an important speaking event for Charles, as he's going to be able to spread the word of blockchain technology, more specifically Cardano, and probably implicitly Bitcoin. So really good stuff there. Tim?
Yeah, well, let's go ahead and jump in and do some technical analysis. We're going to go back here at the second half of the show and talk more news, but I thank you so much, T-Shroom, for keeping us up to date on everything that is important that people need to be aware of when they're trying to make investments. But let's go ahead and jump over to Bitcoin charts, and I'm going to do a little bit of a review today. I'm going to kind of go back through reasons why potentially there could be hope, but at the same time, make sure we are prepared as Bitcoin holders. Just because there's reason for upside does not mean that you should start investing everything you have in right now because there's no chance to go to the downside. We're going to be talking about both of them, but I want to start off with just maybe a couple of reminders for reasons why, hey guys, there is a reason for Bitcoin hope at the moment. And the first one we talked about yesterday was the RSI on the weekly chart here for Bitcoin. This is an all-time low, hitting down here around 25, 26 on the RSI. We have never done that in the history of Bitcoin. Going out, if I were to show you guys on the BLX chart, if my page wants to load, come on here, Wi-Fi, don't do this to me.
Not Tim.
Give me
Don't
just
do it
this.
to TA
Yeah,
Tim.
come on now.
TA Tim needs his
Let me
Wi-Fi.
refresh this page. Reload. Come on, Brave browser. Work with me. You're not letting my flow go. While that's loading there, guys, just so you guys know, this is one of the reasons to believe that 20,000 could be the potential for a bottom. And there's going to be a couple more as well that also support the concept of just because 20,000 is a psychological price, even if we dip back down to 19.8, there's still some level there. I don't know why it's not loading. Let me try to go back to my Bitcoin chart. Is the stream down?
No.
Wow, it's just the Wi-Fi in my screen. How terrible is this? Come on now, Wi-Fi. What is happening? Come on now. Wow. This is your Wi-Fi down, T-Shirt?
Nope.
The stream is fine.
Yeah,
The stream
it's-
is fine.
It's probably just a trading view.
I think one of our Wi-Fi, because it went out on my laptop.
Okay, go off my screen real quick. I'm going to try to connect.
I'm off your screen.
Yeah, okay. So let me try to see here if I can get to a different level right here and sign in. Man, this is rough because I have some good notes here. We'll still be getting back onto what's happening there. Do you say, while I'm doing this, T-Stream, is there anything you want to point out on the charts?
Yeah, I could take a look at them. I don't have them pulled up yet, though, so let me
Here, I
go
think,
ahead and do that.
go back. Is my screen working out? It looks like I'm back on track.
Okay, there you go.
Boom. All right, so here, going back to the week later. There we go. Thank you, Wi-Fi. Thank you for staying with us, guys, with all of that. Wi-Fi and technology is always very fun. So if I'm going back through the history of Bitcoin here on the weekly chart, never, ever, ever do we ever drop below that level on RSI. So here we go all the way back to, and this record goes back to 2010, but we've never been this low on the RSI. This is historically low. That is one of the reasons, not the only, one of the reasons to suspect that at least we are getting close to said bottom. But stay on the weekly chart. Another reason to believe that we have some hope here is when you turn on our TD sequential on the weekly chart. Those you know, the TD sequential is an indicator that helps us know when we should be seeing reversals. And last week we had a 9 flash, a green 9 on that weekly chart. So that's the second reason that I do believe that we have some hope here on the market. Now, the other one, I'm going to move down the charts. I'm going to go ahead and turn off TD sequential because I don't need to use that for right now, is we are looking to be breaking into or we're in a falling wedge at the moment. That's a descending level of resistance, a descending level of support, but those two are converging together, and we are sitting currently at that support level. This does not mean it is the bottom. I talked about it yesterday. What this means is that potentially we see a short relief rally into those mid-20s, maybe around 26, 27,000 before we dip back down to the $20,000 level or maybe even lower. I'll talk more about that here in just a second about the actual price bottom, but just, we don't usually shoot straight down to things. We kind of like to move around a little bit, going to the upside and the downside to eventually hit our bottom levels during bear markets. The other one, the last one I want to show you guys is actually looking at multiple charts. I'm going to take my RSI down, and that is using Lux Algo. Again, these are just refreshers. Some of you guys have heard this before. We've talked about it on the show. But if I start out here on the weekly chart, we are overextended to the downside on Lux Algo. What am I talking about? Yes, we had a sell signal way back here in December of 2021, but our take profit, we've actually dropped below the take profit on Lux Algo. So this is one chart saying we're overextended. Moving down to the daily chart, we're overextended on take profit down there as well. It does show if we wanted to keep going like crazy, we could get somewhere around 1850, but breaking through that 24, that is where Lux Algo was recommending people take some profit, or at least start to begin to think about taking profit. We're overextended on that chart. Moving down to the 4-hourly chart, we're overextended on the 4-hourly chart as well. Come on and load for me. There we go. We're overextended at the bottom side of the take profit there. And of course, we go down to the hourly chart as we start to narrow our view. We actually have flipped and have had a buy signal come in within the last couple of hours, and showing that we could potentially see a price rally all the way up to around 21.7, 21.8 before we have some resistance there. So I'm going to stop right there. These are the reasons that there is hope. However, what I want to keep your guys' eyes on, we talked about it yesterday, is fundamentals can change the game. Right now, if all I'm doing is looking at the charts, I'm not preparing myself necessarily just yet for a dip. But if fundamentals start to play the right way and they start to bring the market back down, and we break through the level of 20,000 and yet even better, 19,800, now we're starting to question where is the bottom at that point. So let's look at a couple different things that you need to be aware of in this market. And so currently the first one I'm going to talk about right here is this level of 20,000, but maybe even more specifically, that level should actually be closer to around 19,800. And I'm going to explain why. So again, going back out to the weekly chart, we've talked about this before, and you probably have heard this on other channels. But this 2017 peak that we had, we talk about it as almost, all right, we hit 20,000 back in 2017. Well, technically speaking, that all-time high wick only made it to around 19,850, 19,800, pushing closer to 19,900. This is the argument that a lot of people will make. Never in the history of Bitcoin, and I'll go back to my BLX chart, never in the history of Bitcoin has the price during a bear market dropped below the level of the last market's all-time high. Right now, that's the level we're flirting with as we speak. Of course, we had this level right here that we never dropped all the way back down to at 1,100. And of course, going back, that market holds up. You can go and check for yourself. We have never dropped below our last bull market's all-time high. But here's the other problem. We also, during every bear market, have gone down 85%. So that is what we're looking at right now. One of those trends is going to break. Is it going to be that we drop below previous all-time high and go down 85%? Or is it going to be we're going to find support at previous all-time high and not go down 85%? As we stand at the moment, going back to my regular Bitcoin chart on Coinbase, I'm going to show you guys what we're currently at and what it would look like to go down 85% from our all-time high. Right now, we are only at about 71%. Now, let's pause right there. 71% is significant. That would definitely still fall into the realm of being a bear market. The only difference is when it comes to Bitcoin, those bear markets have always been 85% or greater. Now, the question though is, let's say we were to go to 85, what is that level we're looking at? 85% down is going to be sitting right there around $10,000 to $12,000. So this level right in here, I'm going to go ahead and mark it for you guys. We're looking at this level. You guys have probably heard this from other channels, other technical analysts, other news articles. That level is going to be significant, and I'm going to explain why. But that's the first thing we need to know. When you're looking at the charts, we kind of have this strong level of support at 20,000, 19,800, and if we break through there, there could be a good chance, as much as people don't want to see it happen, we end up going down all the way to 12,000 because that's where we have significant levels and points that are on the charts. So let's pause right there, though. What else is saying that we're going this far? So you guys have seen a lot of times we use the log chart. If you guys are on TradingView, you guys have noticed this button right here that says log. More often than not, when Jebb and I are doing technical analysis, we are using a log chart. And so one of the biggest things people have talked about over the last couple of months is this bear flag that we had back in January. This was January, correct? Yes, January of this year that actually ended up playing to the downside. If I were to go ahead and draw the flagpole itself from that all-time high down to the bottom and then extrapolate this over, this gave us right here a price prediction of about $23,000. Of course, we hit that at. We're a little bit lower, but people would say, all right, well, Tim, we already played out our bear flag. That's the bottom. This should be a piece of evidence that we use to say that a correction is coming, correct? Well, it's not necessarily that simple. If I were to take the log chart off, if I remove this and I'm now looking at what we call the linear chart, what does this predict the bottom of Bitcoin could be in this bear flag? So let's go ahead and draw that flagpole once again down to the bottom right here and extrapolate this out. This would give us a prediction of right above $12,000, sitting right there on 13, middle 12 to 13. This is another indicator saying, hey, if we cannot hold this level of support, because we don't have to play out bear flags perfectly, but if we go through this level of support, that's not only a psychological level of support, it's also historically a technical analysis a key to how we move markets. If we break through that support, the next level is not only from that 85% scenario, it's also from a bear flag playing out on the linear daily chart here on Bitcoin. So these are things that we have to keep in mind. I'm not ready yet to say I'm absolutely positive that we're going down to 12,000. But as I review the charts and as I continue to take in the data, I'm watching fundamentals. I have got to get to a place where I'm going to acknowledge, hey, 20,000 is still really, really, really key, and we've got to pay attention to it. But if we cannot hold, I don't think we're talking about 18,000. I don't think we're talking about 15 or 14. I believe that if 20,000 or 19,800 does not hold, we're not going to shoot down there immediately. There's going to be some volatility, but watch us start to descend down to 12,000 or maybe even lower to 10,000. And here's what I'm going to do with that information. Right now, nothing. This is not a season that I actually want to be freaking out and trying to predict and either enter a short down to 12 or a long back up to all-time high. That's right. And the reason why is because if you're going to look here on the volume, I'll go ahead and get rid of this yellow line. Well, that'll be relevant. That'll stay there. I'll remember that one. But this volume right here on the daily chart, I told you before, this is a great indication alone. When we're looking at this falling wedge, we potentially have some trading going involved that's going to shoot us back to the upside. But let's go down to the hourly chart right now. Let's look at what's happening as we speak. And you're going to notice that we have been converging right above this $20,000 level, and the volume is decreasing. What is this telling me? When I look at this information, what am I realizing? Right now, neither the bears nor the bulls actually have really strong support over the other. This is a time of a lot of what is next. They don't even know what's next. They're actually waiting for the next fundamental development. And unfortunately, as much as I think that we probably should end up rallying from a technical standpoint, I'm going to actually have to say this convergence is not bullish, it's actually bearish. What the bulls need to do is they need to see an uptick in volume. They need to see the price start to rally for even a hope of saying that 20,000 is the bottom. But the longer we start to go down here and the longer the volume stays low and there's this season of indecision, I think the likelihood of bearish fundamentals developing in the season of we have oncoming recession, we're going to find out, does this hike in 75 basis points to the interest rate, is that actually going to curb inflation, or is inflation going to continue to spiral out of control? In which case, boom, we're going to go down. We're watching those things with Celsius continue to develop. We're watching what's happening with 3 arrows continue to develop. If those don't have positive outcomes, those are bearish fundamentals that will send us down. And again, we are hovering right at the level of support. Yes, we have not broken it. Yes, it's not time to freak out and say the world is going to an end. We're going down to 12,000. It is, though, the time to say, I'm not wanting to enter a long right now. I'm not wanting to enter a short right now. I need to see what the next fundamental piece that breaks is. And if it is bearish, I'm going to tell you right now, as much as that sucks for my current portfolio in US dollars, you know what it offers me in the future? A really cheap opportunity to become a whole coiner. Now, I'm already a whole coiner, but for anyone out there who is not, this is going to be a golden opportunity, if you can prepare yourself financially to do so, a golden opportunity for the future of Bitcoin to raise your supply of that coin. It's not going to feel good in the moment. Your US dollar portfolio might not look like what you want it to look like. But when we're thinking about 5, 10, 15 years down the road, these are the golden opportunities that make every investor excited who knows that the fundamentals of Bitcoin are here to stay. That's something that's really important. Last night I was on the show with Debate Crypto, and I got to talk with a couple other guys where we reiterated the importance of, yes, right now fundamentals that are short-term, that intermediate, they affect immediate price. But the fundamentals of the project affect long-term price. You need to decide for yourself. You need to continue to do your own research. But do you agree with and believe in the long-term fundamentals of Bitcoin? If your answer is yes, then you should be loving this opportunity. You just need to make sure you're prepared with a proper plan to act on it in accordance with what we're about to see here in the next couple of months. But that's what I wanted to look at here on the charts. A little more information there. And again, Wi-Fi gave me some fits there. But let's go ahead and throw it to some super chats before we dive into some more fundamentals and some more advice on how to actually handle this incoming recession. Is there anything going on in chat, T-Shirt, that we need to respond to?
Super chats. You want them? I got them. Elliot Locke donating $10. He said, my prayers for Jebb. Tim, you and the team are doing an awesome job. Smay, sorry for your loss. My question, what time frame are we looking at for BTC bottom? Tomorrow, next month, maybe the halving. What do you think? Where's the bottom?
There's a couple questions in there. So let's go one by one. So remind me of the first one.
Well, prayers for Jebb.
Right.
We are definitely.
Yeah, so praying for Jebb. Jebb is just, his body is just not taking this sickness well, and it's been recurring. So yeah, continue to pray for him. He should be seeing a doctor soon to find out more about what's happening with him. So
yeah. So there is only one question actually. What time frame are we looking at for a BTC bottom?
Yeah, and I think that's actually a great question to ask. A lot of people ask, where's the bottom in terms of price action? And that's a really hard answer. The truth is they both are hard to answer, but time might be the better question of the two. So whether we end up, you can go back to my chart here, Smay. Whether we end up rallying up here and hitting a head-on resistance here, or let's even say we gather a even stronger rally and I'm breaking to this level of resistance, I still think that time-wise, we're at least coming back down to 20, if not lower. And so the other thing to factor in, and you can go off my chart now on this one, Smay. The other thing to factor in as we're starting to look at what is the timeline going to be for a bottom in the Bitcoin and crypto market, it also has to do with these fundamentals that are coming out with everything happening. Regulation is another one that we don't necessarily always keep in the back of our mind, that this whole year there has been a lot of information coming out that regulation is coming sooner rather than later. And what we're seeing, as bearish as this stuff is, it is going to force the hand of the government to start figuring this stuff out sooner. Now, a lot of Bitcoin holders and crypto holders do not like the word regulation. They don't want to hear about regulation. But what you should know is that regulation brings us clarity, especially for institutions who are waiting on the sideline. And remember this, we have seen institutions jumping in during this dip. We've seen them jumping in around $46,000, $42,000, $33,000. We saw some more institutions get involved around $28,000. So you're telling me if institutions that were waiting on the sidelines were jumping at those levels, and they were at the wrong levels, they were not the bottom, but if they were jumping on those opportunities, you don't think that institutions are foaming at the mouth right now to get in at 20,000? And yes, there's some stuff on the side. They're looking at some of these exchanges. They're looking at some of these coins that are operating poorly. Is crypto the investment I want to make? Well, Bitcoin isn't those problems. Bitcoin is its own thing, and especially when we're talking about regulation and how the SEC is going to handle it, how the government's going to handle it as a whole, there's already been this split of ideation of Bitcoin is not equal to cryptocurrencies. They're almost like they're two different, like altcoins. They're not the same thing. Bitcoin is not going to be treated like a security. The question at the moment is if it's going to be treated even as cash, or if it's going to be treated as a commodity. So there's a lot to go on with that question, but remember that time frame should be scooted up. I think the news pressure is going to keep us almost having this lull of a summer, or a down summer. What I'm looking for is not necessarily the exact bottom in price, but I think the bottom in sentiment happening somewhere in the fall to spring of this year. So fall of 2022 to spring of 2023, even if the price is still hovering right around 20, or whether we dip down to 12,000, I do believe the sentiment is going to start to flip from the crypto is a doom and gloom space, Bitcoin is unstable, to almost no, it's actually time. And who knows before we hit a new all-time high, whether when we pass 69, when we end up getting higher, is that all-time high going to be 100? Is it going to be 200? Are we going to start actually shooting up into the multiple hundreds of thousands of dollars? That's something we do not know, but I am expecting time-wise, fall or spring later this year, spring of next year is actually the time that sentiment is going to start to shift back to the bullish side. Hopefully that helps and answers that question.
Yeah, absolutely. We got a couple other ones as well, and they are from Mega Spaceman Spliff. T.A. Tim, please read this. You say we never dropped below previous all-time high, which is true. But if you measure the gap, it's been getting closer each cycle. So either this time or next, it will break below.
That's good. I mean, it's a good point. And again, a lot of rules are meant to be broken. So just because something happened in the past does not mean it cannot happen in the future. Or just because something didn't happen in the past does not mean it can't happen in the future. So that's absolutely there, and that's on the table. We have to be aware of it. But there's a lot of things that will change. There's a lot of, the stock market, for example, hasn't dropped by 85% since, I believe, that depression back in the 1920s. So when does Bitcoin become a little more mature and less volatile to where the bear markets don't have to drop 85%? Because I think that's kind of where we're sitting right now. Are we going to continue to drop down to 85%, maybe even get closer to 80% in that range? Or are we going to just go ahead and hold the past all-time high level in history of what we've done before? There's a lot of different things that we're throwing on the table. The other thing is, just remember sentiment. I've been watching the charts. I've been watching over the last couple of years as things happen. People will predict lower and lower and lower, and people almost have this concept of like, oh, I'm going to wait for another 1,000. I'm waiting for another 2,000. I'm waiting for those levels. And then we start to dip, and then we don't get down to those actual levels, and people end up missing on those opportunities. So I encourage every single person to continue to do your own research, to pick your spot, but I would actually encourage you, strategy-wise, pick what you think is the bottom, but buy a little bit above it so that you don't risk the chance of choosing a level just a little too low. At that point, whatever you are comfortable with, that is completely up to you. But I would definitely warn people from thinking that they're going to pinpoint the exact bottom of price. That is just not a realistic strategy that works for people. So.
Right. And then there's a couple quick ones from Queen, said DCA to financial sovereignty, my way, her way. And then also said Gerber baby, heart, T-shroom. So kind of a throwback to earlier this week, the meme that I look a little similar to the Gerber baby. And then we've got one last one from Rick Race. I really think energy prices is going to have a huge influence on crypto. Watch, and then he says that the futures contract index for energy, if we get relief there, I think it will open up the floodgates. So it's an interesting theory. Maybe it plays
relief on energy will open up the floodgates for crypto.
Yeah,
it's possible.
Kind of plays into the mining story. I think it also plays into just the economy can kind of take a sigh of relief as energy prices come down, because so many businesses are reliant on energy prices being low. Think FedEx, think Amazon, UPS are extremely reliant. Also airlines, trucking companies, anything that incorporates a supply chain. Only really tech companies aren't super reliant on oil prices. But yeah, it's a decent point. Definitely a decent point.
Yeah, it is. And so, we're going to go and transition here. If you guys have any other questions, we'll answer them here at the end of the show. It's a light day today. We only have 1,000 people in chat, but we can definitely get those likes above 250. We're about to transition into a segment that we don't often do, and it is going to actually really kind of help you guys prepare your mindsets. If you don't already have a plan for incoming recession, we're going to talk about maybe some potential ideas you could bring into mind. But first, we do have a word from one of our sponsors. Again, it's because of our sponsors we can even be here with you guys. So thank you so much to Hedge. And the reason Hedge, to me, is actually one of my favorite sponsors we have here is because of its use case, specifically in times like right now. So most of you have probably heard us talk about Hedge before, but I'll tell you, for anyone who's new, Hedge is an amazing project to help your DCA strategy. How is that? Hedge works to actually help you get paid directly in crypto, whether it's Bitcoin or Ethereum or Litecoin or Cardano, whatever you want. It's actually a program that allows your paycheck to be rerouted to where a portion of it could be paid in crypto. You might be wondering, Tim, why do I want crypto right now? Crypto's all-time low. Well, guess what? For those of you who have a DCA strategy, you're already taking money out of your paycheck, converting it into crypto. Why don't you go ahead and just skip that step of having to take US dollars, pay some fees to transfer over, and rather have automatic withdrawal from the company come to your account in crypto? That is what Hedge is doing. That is something I'm super excited about. And so if that's something that you want to see, support our channel, support that company, and support yourself. There's a link down in the description below. You can sign up for that today. You are not going to regret it. But let's go ahead and go into our discussion here about the recession. So here, we had an article, we had some news come out of the White House, T-shirt. What is the White House talking about right now when it comes to recession?
I will tell you exactly that. Jordan, if you'll go to my screen, we've got the headline, despite warnings from economists, Biden says a recession is not inevitable. And I've got a couple, there he is. I've got a couple of selections to read here. First of all, this is Biden's words. First of all, it's not inevitable, he said. Secondly, we're in a stronger position than any nation in the world to overcome this inflation. And then another excerpt I'd like to read. Be confident because I am confident we're better positioned than any country in the world to own this second quarter of the 21st century, Biden said. That's not hyperbole, that's fact, right? So essentially what we have here is, he's trying to rally the troops. He's trying to, everybody think positively. We're not going to go into a recession. And, not going into a recession would absolutely work into his favor as the midterms are right around the corner. The man is very politically motivated with these comments, but it's not necessarily a bad thing to try to encourage Americans to think positively. But the real takeaway here for us is that President Biden says the recession is not inevitable, so the recession is officially inevitable. So what can we do to prepare for this recession? Well, Tim, what do you think?
Well, here's the thing. I was only 15 when we hit that recession in 2008, but there are some lessons I learned during that one. And there's lessons a lot of you guys can learn that you can apply to your life right now, that there is a chance you can keep yourself recession proof. And I don't mean keep yourself out of a recession, but I mean you will make it through, you will thrive, and you'll set yourself up for something better on the other side. So that is our big idea for today is recession does not mean you have to fail. Recession does not mean that you have to walk away from it worse. There is a way to make sure you set yourself up for benefits. But there's some key points and some questions we need to discuss with that. So first of all, T-Shroom, I'm assuming everybody would know, but just in case there's anybody who's out there with doubt, what is the definition of a recession and what does that mean we're going into one?
Yeah, absolutely. Well, you don't need to go to my screen for this, but a simple definition of a recession is 2 consecutive quarters of declines in quarterly real gross domestic product, of course, adjusted for inflation. So, I believe that we've had a negative quarter of GDP so far. So we only need one more. But it's more than likely inevitable, right? If the White House is trying to say something, more than likely the opposite may be true. So that's kind of what's going on there.
So that's the end of the answer.
That's the end of the definition of what a recession is.
I think we should avoid dead air.
I thought there was more to the answer. All right, well. So, T-Shroom, following up that question, what happens during a recession? What do people need to be prepared for? Are you
sure you want to ask T-Shroom that question? Do you think there's maybe a guest that might be better equipped to answer?
Do we want to bring that guest in right now?
I think we might.
All right. Well, okay. I told you guys there was 2 special guests. Not only were we joined by Jordan Peterson today, we also are joined by the famous Dave Ramsey, who is notorious for helping people stay out of debt to prepare themselves for financial freedom. Dave, thank you for joining us today. How are you doing today?
Oh, better than I deserve, Tim.
Oh my gosh. Well, Dave, let me ask you instead of T-Shroom, what happens during a recession?
Well, it's an excellent question, Tim. It really is. And it's disappointing to see, the way that people squirm during a recession. But they really should know that in a recession, unemployment rises, okay? Consumer spending falls off a cliff, okay? Which is, kind of what I want. I don't want y'all going out there and spending a bunch of money on frivolous things you don't need. But also businesses go bankrupt. Not happy about that. Jobs go down the drain. Hardworking Americans lose their businesses they've worked so hard to create. And the other thing is people lose homes, right? Those mortgages, if you've bought too much home, you're too home heavy, so to speak, you could potentially be in for some pain. You could lose your home. And that is actually nothing to joke about. So that's important there. But also graduates struggle to find jobs. So if you're in college right now, going into a recession, it's potentially tough, And if you're in debt, don't get me started on debt.
Very well said, Dave.
If you're in debt from student loans, you better be going into an industry like engineering or law or medicine where you're going to get an ROI on the education expenditure that you've incurred so far. But one thing, I don't know if you know this, Tim, and again, thank you so much for having me on your show. It's really been a pleasure. I love coming down to
Glad to have you.
Florida. But on average, did you know that on average that recessions last about 10 months?
Yeah. Well, I didn't know that, but there's a chart over here. If you want to go to my screen here real quick, am I talking to Jordan or am I talking to Smay? I don't even know who I'm talking to anymore.
It's me. It's me.
Okay, it's Smay. Okay, good to know. Good to know. All right, well, if you look at the last couple of recessions, technically speaking, by definition, that before we brought in Dave Ramsey, T-Shirt was talking about what the definition of one is. We actually had the shortest one of all time here in 2020, where we did have, by definition, a recession. But then we had an 18-month long one back in 2008. That's, of course, the one that is fresh on everyone's brain. A couple of 8s, 16, 6, 16, 11. What is your thought, Dave? Do you think this is a 10-month one? Because yes, the average works out to 10 months, but do you think this is going to be an extreme recession? And then I'd also ask you, what is the difference between a recession and a depression, and what would we need to see to then transfer from recession into that?
Absolutely, Tim. It's an excellent question. There's really a lot that I can say, but you need to prepare for the worst for this recession. This is a recession that actually there's a guy, T. Shroom, on the Crypto Jebb channel, with this channel. He made a really, really good analogy the other day, saying that what the Fed essentially did is it took the negative energy from the pandemic and it transferred it to a later date. That later date is come now. And the Fed's in debt. This country's in debt. But they were able to do some judo on the negative energy from the pandemic, but they've transferred it to now. And now we're going to reap the negative benefits, the negative outcomes of that pandemic. And so we are preparing for the worst, right? This recession could go on for as much as, I'd say, 10 months. It could go as long as 16 months at the worst. But, you're just going to have to hold tight. And you're not going to want to spend a bunch of money on frivolous things. And we'll get to that in a second.
Yeah. Well, I think, just wrapping up even the big idea, I think as we're transitioning this conversation, people need to know recession is coming. It is coming, and it's going to hit hard. And if you're not prepared for it and you don't have the strategies put in place now, it might just wreck you. So the reason this matters is that the whole point of this channel is about helping you guys create financial sovereignty. But I want to make sure people understand what financial sovereignty is. Financial sovereignty is not sitting back doing nothing and then your money just flourishes. I want to compare it to almost like farming. And you guys have heard you reap what you sow. Well, guess what? In farming, there are times where, yes, you have complete control. You can just sit back. The rain is running hard. The plants are growing. You don't have to do much of anything. And that is awesome. But the reaping and the sowing, that's time to put in some hard work. And you know what this season is? When you're looking at recession, when you're looking at bottoms of bear markets, that is the reaping time frame. That is the time you are digging in the soil. You are investing those plants into the soil. And it's going to take attention. It's going to take dedication. It's going to take sacrifice. There's going to be sweat. You guys will probably have days and nights where it's hard to sleep because you're stressed out and because you're trying to do things accordingly. We want to minimize all of that, but we also don't want to discourage you from, hey, this is the time to learn all about the market, to educate yourself, to grind and reap some great things that later you'll get to sow. Say it the wrong way. I did it in the planning meeting too. Sow, and then you'll reap later. Gosh, that analogy fell apart on me. You guys know what I'm talking about. This is not a season to say that, well, just because I actually have to pay attention and grind and learn, this isn't financial sovereignty. No, part of financial sovereignty is the grind, is the learning. And so some questions I have for you, and I'm going to still be talking to Dave here for a second. How do you, Dave, advise people that they should survive during a recession? What are some key points and tips that you would give people?
This is the question, I'd say. And what you're going to want to do immediately is limit spending. If you've got a bunch of streaming subscriptions, narrow it down to one. Or, hey, maybe just watch me on YouTube, Dave Ramsey Solutions. Or the guys over at Crypto Jebb. They've got a lot of great content.
Or me and Jordan B. Peterson.
So that's one of the things you can do. Limit spending. Look at your credit card expenditures. See what you're spending money on and see if you can cut back. If you're in debt right now, you need to really just be eating rice and beans and rice. The only restaurant you should be going in is one you work in, right? That's a Dave Ramsey hallmark. Another thing you want to do is prioritize necessities and things that could bring you an ROI, right? And ROI is very important. You want to get a return on what your investments are. You don't want to just be out there buying boats, buying new fancy trucks, right? Those things are depreciating assets. You want to be looking for things that have a return if you are even spending money in the first place. You also want to avoid employment risk. This is not the time to be going up to your boss and making dodgy comments and trying to tick him off, right? You do not want your boss ticked off at this point. You want to have a happy boss who's willing to keep you gainfully employed. You want to also expand your emergency fund, and I cannot stress this enough. This is baby step number 3, probably. You want to expand your emergency fund. You want to have that emergency fund bigger than it usually is. Actually, as a matter of fact, Tim, what's your emergency fund looking like right about now?
My emergency fund?
Yes.
You want me to say my numbers on here, or you want me to tell where it is?
You
I don't know what you even want from this question.
If
Dave.
you don't feel comfortable disclosing your emergency fund number,
I have an emergency fund. I don't know if I'm going to say numbers and figures.
Do you feel comfortable with it? Do you feel like you need to expand it?
Like right now, again, as much as I would wish my portfolio was a little higher, I'm very comfortable with where I am. But it's because it's about prepping yourself along the way.
But your portfolio is different from your emergency fund.
No, I'm not. Okay. Thank you, Dave.
There's no thank you. You either get it right or you don't.
Tim, I'm afraid you're not being very agreeable right now.
I don't know where Dave is going with this at this point.
Yeah, but anyway, you need to expand your emergency fund. It needs to be probably about 20% higher than it usually is. And this is serious consideration here because things can happen in a recession. And if there's not an emergency fund there, you are going to be up a creek without a paddle. And that emergency fund is that paddle. You also need to do the last thing that I get the most excited about in the world, and that is to pay off debt. You should not be in debt. If you're in debt, it should only be your mortgage and maybe some student loans that you're getting an excellent ROI on. A new car? Heck no. Credit card debt? Heck no. If you're going out and getting a bunch of debt during a recession, you're a dummy. You're a knucklehead. And you need to look yourself in the mirror and say, I am in debt and I need to get out of it. Rice and beans, beans and rice. That's the only food you're going to be eating to get out of debt. Well, I have one last thing before I get T-Shroom back in here, and that's to make this interesting comparison, a thought experiment, if you will. Paying off credit cards that charge 16% interest is the same as earning 16% interest on your money. Think about it like that. If you're in a whole bunch of credit card debt, and really follow with me here, I'm being serious. If you're in a bunch of credit card debt and you're paying anything north of 16% or any percent, think about it like that. That's the same. Paying that debt off and avoiding that 16% fee is the exact same thing as making 16% in the stock market, in crypto, in annuities, in real estate. So before you go out and start gunslinging thinking you're some high-flying investor, pay off that credit card debt.
Well, thank you so much, Dave, for joining us. And I don't know if I'm going to have you back because that was long. I love you, Dave.
It was very aggressive.
All right, so I'm gonna just kind of wrap up some of that stuff before we keep moving on. I think the really important stuff there, and someone asked in chat, they said I could tell my time frame. I would say if it's an interesting, I'd have to refactor to make sure it matches, but I would say it's about 8 months at the moment what I have for my emergency fund. If I ran into some trouble, I got about 8 months on me. So maybe that could be a little bit higher. But again, if you were to ask me that question 2 years ago, it would have been about 3 days would have been my answer.
No, I think that's pretty good. I think Dave Ramsey would agree with that.
Okay, good. It's been when I was younger, I took a Dave Ramsey course with my parents, but it's been a little minute since I did that. But I want to reiterate something really important that Dave said. There, and that is that you really need to look at where you are and limit that pleasure spending. So for every single person, that is completely different. You can't put every single person in the exact same box and say they have to follow the exact same rules. That's not the point. You need to evaluate for yourself what's the difference between pleasure or desires and necessities. And necessities have to take priority. What is a necessity? Well, if you own a home, you probably should be trying to protect that mortgage. You definitely, if you have a family, and even if it's just yourself, you need to make sure you're continuing to provide for your food, your house above you, and any other necessity you need to continue to thrive. And guess what? That doesn't just include physical, because I think a lot of people draw the line at physical needs, but there's emotional and mental needs as well. And the last thing you want to do in this market during a season of down ticks in crypto, in your investments, if you start to lose it mentally and psychologically, and if you start to enter into seasons of whether it be depression or anxiety, that is not going to put you in a position of success for the future. So I am including mental natures and emotional strength in your necessities. You do want to prioritize that. And if that fills all your money, if that's all the money you have, that's what you have. That is it. The next step is to make sure, again, don't go to pleasure, don't go to excitement, go to ROI. And guess what? Yes, the price of crypto could continue to go down, but it's also the perfect time to invest in these low prices for long-term ROI. So if you can afford it, you definitely should go there. But the other thing is education. You need to continue to educate yourself day in and day out. And there's a lot of places that are free. There's a lot of places that are cheap. Find what works best for your budget, your schedule, but invest in your future as much as you can afford. Again, if you've taken care of your necessities, and as Dave was talking about, if you're prepared for really disaster scenarios and you still have some money left over, ROI is the game. Invest in your future, whether it be crypto at low prices or the education to understand for the next bear market or the next top of the bull run how to handle it. Invest in your education now with that money. But let's go ahead and transition. We heard some examples of what we should be doing right now. T-Shroom, I'm glad to have you back on set. Is there an example of something that you should not be doing right now while we go into a season of potential recession or even worse, a depression?
There is, and we're going to go over this extremely briefly, but if you will go to my screen really quickly, the Daily Mail, which is a cool UK publication, it is covering this headline. Crypto King makes wild promise he will sell his $7 million pad and go all in on Bitcoin if the cryptocurrency drops another $10,000. But don't expect him to get rid of his famous clifftop mansion. So the dedication, the commitment here that the King of Crypto has made is the Finder co-founder. So he founded the company Finder, which is a comparison website. The Finder co-founder vowed to buy a lot of Bitcoin if it falls to 12,000 USD. So that was just a fun little thing. But some
a great example of a bad idea.
You can leave my screen. And crazy millionaires can afford to do something like this. If you have a business that's churning hundreds of thousands of dollars a month, you might be able to make some kind of audacious commitment like this. But this is an example of what not to do.
Yeah. Absolutely. And that takes us into now going into our application. Again, we know recession is coming and we know the steps we need to do to actually provide and protect ourselves against being hurt. But again, I told you guys, take care of your mental health. Continue. I'm not saying just because you can't afford to do things that are fun, to not do things that are fun. What are some things that we can do, T-Shroom, to actually still enjoy our life, to still prosper mentally and physically, but don't cost a lot of money?
Yeah, so I wrote down, I made a little list before the show, and there's basically you want to find time to be a concert to conserve your money and find some little fun, little cheap hobbies to get involved with. Some of those hobbies might be fishing, reading books, helping people in need, elderly people in your neighborhood in a non-predatory way, both ways. They're not preying on you or taking advantage of you, and you're not taking advantage of them. Just genuine, American goodness, going out there and helping people out. I think I might still have a little bit of the twang. But also learning to trade crypto. Just because you're learning to trade crypto does not mean that you're making these giant margin, triple leveraged trades. It means that you are learning, you're investing in your education so that you can be well positioned in case a good trade opportunity presents itself. And it looks like we're going to be having a very big one here pretty soon to buy the bottom of crypto. Another really good hobby is sleep. Sleep a lot more. You're not getting enough sleep. So do that a little bit, take more naps, and it's free. It's free to take a nap. A lot of people with very little money are out there sleeping right now. Write down all the investments you wish you hadn't made. So take this time while you could be out partying and spending all your money. Take this time to sit down with someone that you really value, maybe your wife, maybe a friend, and go through your trading history. Not super extensively. If you're a day trader, you probably won't be able to do this, but really think about the investments that you've made that didn't produce what you wanted to see. What was it about you emotionally at that time, maybe that made you make a hairpin trigger decision in accordance with fear or greed in that moment? And also take some time to look at those big wins that you've had. Maybe you made a great investment, whether it be stocks or crypto. Just kind of take some time to reflect and let your subconscious be bathed in the lessons of your trading so that you can maximize your trading potential in the future. Another one that we wrote down is college. Go to college during a recession. It is a very popular time for Americans to go to colleges during recessions. I'm talking about folks in like their 30s, folks that aren't traditionally going just from high school to college. A lot of people consider going to college in that time, but as Dave Ramsey said, make sure, for the love of God, you're actually studying something that is going to produce an ROI, something like engineering, law, medicine, and there's a bunch of others too. But make sure that you're well investing those education dollars.
That's great stuff. So as we wrap up this whole discussion, the big takeaway for anyone who is watching the show, it's just time to shift to being very conservative, but continue to keep your eyes open for opportunities. They will be there. Take care of your priorities, take care of your necessities, take care of yourself both physically and mentally, and then after that, look for great ways to continue to learn and grow in the space. And again, if there's still money sitting on the side, as T-Shroom said, invest in your education to a high level, like even going back to school, to make sure you're set up when the bull market comes back, when the economy is going back into a season of thriving. You're setting yourself for a life of what you love doing, and it's a mass demand in the market. So what we're going to do real quick, do we have a couple of super chats to respond to?
We've got one concerning the DXY.
Yeah.
Bearish divergence. So you can pull that one up and talk about it. But and we also have the predictions, price predictions.
Let me see what we have here. He said bearish divergence. Did he say what chart time frame?
The DXY. Daily and
I'm looking
weekly.
at the wrong thing. Hold on, I was looking at Ethereum. My bad.
Daily and weekly.
Daily and weekly.
And this was Ewan Kenobi
Yes.
donating $5, said major bearish divergence on the DXY, daily and weekly. What are your thoughts? And we're going to share those thoughts right now.
You can go to my chart here real quick, Smay, and if you guys are looking at these points, we are definitely descending in our peaks with our RSI, but at the same timeline, we are ascending in price with those peaks. So, I mean, I drew those. I could easily just go with these ones right here. So yeah, I mean, we definitely have some bearish RSI divergence forming on the daily chart. Let me go real quickly and look at the weekly chart. You guys know I love me some bullish and bearish RSI for trend reversal. Yep, sure enough, same thing there, although I would have to change it just slightly because this could go up. And that's something to keep in mind, is that this weekly chart, weekly candle is not done closing, and so it could go up, it could go down, but as it stands right now, yes, theoretically speaking, we're still sitting in bearish RSI territory, and this would kind of fit the sentiment we talked about earlier. Is I'm not saying the bottom is in, and I'm not saying that we have to go lower. What I do think, though, potentially there still is some strong arguments to say we could see a short relief rally before coming back down to 20,000 or even lower. But we do need to continue to keep our eyes on the fundamentals before we make calls like that. Again, as much as I love technical analysis, this is all about price analysis here at this channel, and we want to help you with the fundamentals to help you understand what's happening in the price. But right now, we are in a season where neither the bears nor the bulls really have control. They're waiting for the next fundamental tip. If nothing comes, maybe I'm going to give some advantage to the bulls. But if something does happen, which is very likely, it could give an advantage to the bears. So let's continue to keep our eyes on this. But this is a good sign. The DXY is sitting in having an indicator showing there could be a reversal coming soon. I love seeing it. But again, let's not rejoice before it actually closes and finishes out. So yeah, the other thing we have to announce, it is Friday, so we have the winner announcement of our HODL trophy, and it was me this week. I think Smay, you said 19,000, and T Shroom said 18,000. I said 20,000. We are sitting currently on Bitcoin at 20,500. So while I did think we'd had a little bit bigger of a rally than this, I really, in all reality, thought we'd be a little closer to 21. I did say 20,000. I am the winner of the HODL trophy. Thank you, Smay, for bringing me my trophy. You know what? It's been a minute since I had it, so it's good. It's good to have this sucker back on my desk. I want to thank the Academy. Oh, no, I'm just kidding. I want to thank the charts for hitting my price.
We got two super chats.
Two more super chats. Let's go and read those, and we'll close out.
Yeah, we've got one from Matt C. donating $20. Said, recessions and bear markets are the best time to build.
Yes.
Don't let it scare you. Use it to your advantage. This is the best time to set your foundations for the future. And that is something that we can all agree with. Kelly Kellum donated $5 and said, I believe in all of you. Stay focused, keep life balance, and get into Club DeFi. Smiley face.
Club DeFi. We got a good announcement coming out on Monday. You don't want to miss Monday's show. Club DeFi is coming along. Thank you to Kelly Kellum, who is just absolutely killing it with all the work he's doing over there. If you guys don't know what we're talking about, come watch the show Monday. We got some big stuff happening there. But guys, I want to wrap it up today and just kind of leave you with one final thought. There's just no certainty about the market right now. No one can predict what's going to happen. What you have control over, though, is how you set yourself up and how you strategize for even the worst scenarios. We've had a joke around this office this week, kind of misquoting that famous quote by Benjamin Franklin, but I'm going to quote it correctly because it is very, very true, and you need to have it close in mind throughout this whole entire market, and that is those who fail to plan to fail. If you right now can use this golden opportunity not only to invest in very low prices, but to invest in your education of how you conduct yourself financially, that is the definition of financial sovereignty, where you have a plan and you have control over your finances. You know when it's time to work hard. You know when it's time to rest. You know when it's time to do everything you need to do and not have to live in a constant life of fear and anxiety over your financial situation. You will have that financial peace. That is what we're all about. Guys, it's Friday, so this is the end of the week. We will be back next week. I'm really, really hoping that Jebb, whatever Jebb has, he's able to kick this weekend, and he should be joining us Monday. But no matter what, the team is here. This team, the Crypto Jebb team, is going to continue to come in and day out and help you guys construct for yourself what you need to do in this crypto market. I love each and every single one of you. Thank you for joining today and the rest of this week, and I'll see you in the next video. Peace.
Oh, I got a real good feeling.